We are now approaching the tail end of a slow-moving weekend. There are some potential signals at the point of firing off that can give this asset a nice boost to the upside. There's also a bit of strength coming in from BTC, so there could actually be a shot at some nice price action in the short term for the coming week. Welcome back to the channel on this sunny Sunday. This is ARCa, and let's dive into ticker symbol ADA. Let's kill 'em, team. What is up, you guys, and welcome back to the channel. Please do me a favor and hit that like button, subscribe to the channel, do that whole thing that finesses the algorithm to get some more viewers in the channel, right? So let's go ahead and dive right into ticker symbol ADA, and we're observing here ADA against the USD, and this is going to be Cardano 3-hour chart. We're going to keep it simple right at the beginning, right? Before we get in to the actual distribution charts, which would be the statistical side of the analysis, where I've ran a critical backtest here of historical volatility in linear, right, throughout the entire trading history of the 6-hour time frame of ADA. So we'll go ahead and go over this right as we move on, right? So make sure to stick around here because I do have targets available for all of us, and this should actually serve for a benefit for the ARCa Bulls trading team as well. So please consider joining the ARCa Bulls trading team. A link will be in the description below, and also, either right up here on the top right of your screen, it'll pop up right somewhere around that 138 mark. All right, so yeah, let's go ahead and get rolling with this. Okay, so what you're observing here is actually a bear play, but my thinking here is that the bear play is at the brink of getting invalidated. Okay, so this is an ascending broadening wedge. We're going to look at, some silly formations first, and then we're going to look at the statistics here. So what we're going to do is we're going to combine strategies here, right? We're going to combine the statistical side of the analysis as well as the discretionary psychological strategies paired with geometrics using Fibonacci extensions and Fibonacci retracement targets, right? So, yeah, sorry, just a little bit out of air there. So, yeah, this is the 3-hour ascending broadening wedge here. So, typically speaking, this formation tends to realize when we have 3 tests of the resistance. And now at the third test of the resistance, there is the biggest capitulation event, right? So now notice how I'm not touching down on this target here, because if we zoom in carefully enough, there is no touch there, right? So that is a false signal there. So test number 1 actually started right about here, right at this point down there, right, or up there. Test number 2 is a unified test, right? These would be tests. We didn't have any closures of candles below the regression line here as we climbed up. And test number 3 and the magical number, test number 4, which would then start to give you the invalidation. And what I mean by that is that as soon as you start testing, here's the thing. This is observing this formation. I've actually played around over maybe 80 or 90 iterations of this formation in different time frames and different asset classes, and I got to say that this formation probably has one of the most competitive batting averages, right? The strike rate. It does tend to realize pretty nicely. And the thing is that batting average particularly lands with the descending version of this formation, right? Yes, this one still has a good high hit rate as well, and I have played it with other assets too. It's just the descending version of this has a better hit rate than the ascending version of it. Okay. Now, so with that said, using the test number 4 based on observations of over 90 iterations of this formation, the 4th, 5th, and 6th test usually lead to a complete invalidation of this formation. So that means that this 4th test usually would get a fake out, right, or a bear trap. We already kind of trapped down here, right at around that 57 mark, where we had that huge capitulation candle down here around that March 5th, 2024 this year, right? So since that, we have been creating a series of higher lows and higher highs as we go, right? Well, actually, we still need a new higher high here printed in order for us to validate that continuation on that signal. So now another thing I'm noticing here is that we have volatility, or I'm sorry, we have momentum here pivoted towards the upside, and it is suggesting a continuation of that, right? It is the 3-hour time frame, so it is suggesting a pretty nice signal within that. Okay. Now, within let's see the data here for the daily time frame, right? So it looks like we have the daily ATR top, which we could be about, let's see, 4.5 cents is your daily ATR range. So from the opening of the day, you can move around 4.5 cents up or down the asset, right? So in this case here, we are sitting at a 65% and 65 cents, and BTC just climbed to 71,080 at this present moment. Okay, and it's about to be 71,100 at this point. Yep, we just broke that 71,100 mark, and this is Cardano kind of getting affected by that, right? So if this play does not work out in the bull thesis that I'm thinking, the bottom side target is 46 cents. Traditionally speaking, the genesis of the formation is your take profit, right? But again, I'm not sure that could be the case. And in fact, there could be a bigger bear trap in line than I thought, right? And the reason why I say this is because you have a head and shoulders formation as well that usually leads to a downside. Targets to be expected could be somewhere between the 59 to 57 cent range. Okay, so let's pull up the bull thesis from this case. Okay, so I have this is the bear thesis here. So let me just go ahead and bring up the bull thesis and undo the bear thesis and show you what's happening right now. Okay, we're gonna go ahead and get rid of this too, and the indicators as well. So you know what? We'll get rid of the moving averages too, right? We don't need them there. So yeah, another little silly formation here, right? But we're just going to go ahead and evaluate this. So this is a bull pennant, right? This bull pennant usually is a continuation formation built during an upside phase, right? So we're getting this downside here, right? We're getting this ebb and flow, and then we start a price convergence, right? So on this price convergence here, my absolute latest time for this thing to break out would be here. So I guess today by 8 p.m. Pacific time, if this doesn't break out of this formation, then this formation is completely invalidated. Okay, usually these triangles tend to break at around 65 to 75% to the apex of the triangle. So we're getting pretty close to that apex as we speak, right? And in fact, we have 2 hours and 9 minutes to close this 3-hour iteration. Okay, so let's start taking some targets. The triangle family usually provides 3 targets: the breakout target, the center of the triangle, and the highest bound, right? The widest bound of the triangle. So let's go ahead and mark those off here. So let's just say that we were to break out at that 8 p.m. mark, right? And then we could use that as the point of reference for the other 3 targets, or for the other 2 targets, my apologies, right? So something like this here would be what we would be looking for in the bullish case scenario, right? So far, my feelings are kind of favoring the bulls in this particular case, right? So we'll leave. Yeah, you know what? We'll go ahead and leave this as a green marking here, so that we know what the play is kind of looking like, and also kind of keeping us in line with each other too. Okay, so I want you to take a look at the Fibonacci retracement here, right? So go ahead and take a look at the range high to range low Fibonacci retracement that I actually took into account here. Right, a little different than how people use it, but it's all good. So the one spot 618 golden mean matching the 72, or it's confluent to the 72 cent target that we're observing, right? So we're going to go ahead and leave that there. Now, the center of the triangle, the target here is very, very, very much confluent, almost exactly to the 69 cents of the one spot 272. In fact, it is exactly that. And now, of course, your one fib, that's just where we took the upside target from, right? So that's going to be, naturally speaking here, we should favor the 0786 at 67 cents to that 68 cent zone, right? So we have now those targets to observe here, based on the psychological take profit. So since we have some targets to observe, what are the probabilities here for reaching any of these targets? Well, we just spoke about 68.5 at the daily average true range. So that means that today we have the probabilities of reaching 68.5, and guess what? The center of the triangle, 69 cents at the one spot 272. Very nicely correlated, right? And in fact, the 68 cents down here is also correlated with the 0.786 and the 1/5 that we used at the range high. So already we're getting some nice confluence here, right? So let's go ahead and continue on and see if we have any further analysis to add to this. Remember, we're talking about now the statistics, but actually I'm going to go ahead and do this. So we're going to observe here two very simple things. The 5-minute time frame. I don't tend to use these moving averages here for crypto, but it's okay. The EMA 200 and the SMA 200 are currently being converted into supports as we speak, right at that 65-cent mark. That means that we could actually break above that EMA 200, come back and support from it, and then continue on to the upside. Usually a 5-minute time frame is not the best time frame to look at for longer signals here, but it is a foundation here that we can use for the immediate short term to determine how the time and the price will cascade from an earlier time frame into the later time frames. Now, the reason why I brought you into this chart was actually because of this. So please go ahead and notice here that we are using RSI versus price action, and this is going to be your divergence chart. So this trough right up here, you're noticing a lower high, right? So from this higher point here to this lower point, which is this high of the price to this high of the price, that marks off a drive of regular bearish divergence, right? So that actually did play out pretty nicely. Price action came down all the way to this, from the top side of around 81 cents down to 57 cents. Now, what I'm observing here is actually a drive of regular bullish divergence, right? So, or hidden bullish divergence, right down here, right? You're looking at this trough matched right here, and you're creating a higher low while momentum is creating the opposition. It's creating a lower low, right? And it is, it's all good. It's crossing price action, no problem, right? It's still a divergent drive, and it's hidden in its nature, right? So that is now leading towards a potential upside. One thing that I'd like for you to note is this. We are breaking upside of the SMA 14 from the RSI, right? The teal blue line is your RSI signal. Nice little inverse head and shoulders here too, right? More formation theory for you. All right, so yeah, we're actually breaking above the SMA 14. We're testing it and testing it again. Now, the important thing is that we're actually in a gravitational point right over here. So as soon as you get that price action to bounce from this SMA 14 and lead inside of the 48% from that 50% of the center, this is going to be a gravitational pull, right? We'll be able to continue to the upside here based on the current strength of BTC and the current strength of the gravitational pull from the daily time frame RSI center point here, right? So that'll lead to a continuation to the upside, and it'll continue validating our macro signal here for the drive of a hidden bullish divergence, right? So things are looking good there. With that said, let's go ahead and now touch on the correlation, right? So usually what you want to do is take a look at BTC against the asset that you're facing here to see how tightly correlated they are. And you can actually see here that in the correlation coefficient, we have a read on the daily time frame, right? This is not even the weekly. It's at about 75%. You can actually see the value right up there. Now, if we jump over to the weekly, then that's going to be even tighter, right? So take a look at that. Within the 80th percentile of correlation. So you can definitely bank on BTC's strength bleeding into the ADA strength, right? So that's looking good as well. Now, for the magical part, let's go ahead and go over the statistical analysis for this, because I have ran a pretty intensive backtest of historical volatility in linear against momentum. And please take a look at this. This is the entire backtest here in the 6-hour time frame. And these are all the samples, right? I've gathered every single sample of what price action did based on a particular signal of volatility. It's actually particular to the contraction phase turning into an expansion phase, right? So let's go ahead and, sorry, this is actually not a daily. This is actually a 6-hour. So let's go ahead and leave it like that. Okay, and I've also plotted it out onto a standard distribution curve. This is your bell curve, right? If you're familiar with statistics, then you'll know what this is. Okay, so we have a total of 93 iterations spread across the 6-hour time frame of the ADA asset. And from the 6-hour time frame, we have, those 93. From that 6 hour, we have 67 guessed correctly to the upside, leaving 26 incorrect. That puts us at a 72.04% upside accuracy with an average upside thrust of about 9.21% based off the firing of the signal. The signal has not fired just yet. We're still in contraction. All right. And we're actually now starting to curve that momentum curve, right? We may actually start shifting here. So this is us kind of catching it early. All right. So now I have calculated your average upside thrust. Think of that as your mean, right? That's going to be right at the center. Your average move based on the signal of the criteria, right? So your standard deviation move is set to a 7.77% move to the upside. And beyond that, I have, just in case, right? I have calculated the probability densities as well. So you're looking at the upper and lower bounds of the first, second, and third standard deviations. Negative values are unusable in statistics. Do not mind them. Okay, so now let's go ahead and take a look. We're going to go ahead and take a closer look at the probability chart here, right? So let's go ahead and see what could happen, right? But please remember, the signal has not fired off just yet for ADA, for this volatility signal, but it's okay. We can just identify a potential here. Let's just say that we were to break out of that volatility here, right? This is your linear volatility. If we were to break out a linear volatility from the 15% mark, let's say, right, because that's your back test criteria. If we were to break out of this, say, maybe by Tuesday, 5 a.m. Pacific, and we were to break out of this at the price that we're in, 64.53, right? Let's add, I'm going to put it right over here. Let's go ahead and add the numbers to this, right? So we have a standard distribution of about 7.77% to the upside. So let's go ahead and add that right in there, just like this. Let's go ahead and now add the average upside thrust, which is going to be your mean, right? So that's going to lead to a 9.21% move to the upside. Now let's go ahead and add your upper bound of the first standard deviation. And you know what? I'll go ahead and even add the upper bound of the second standard deviation as well. But I would like for us to kind of not focus on that just yet, because we're not there just yet. We'll move accordingly, right? So this is going to be the upper bound of your first standard deviation. And now the next one here is going to be the upper bound of your second standard deviation. So that's going to be a 24.75% move to the upside. Let's stop it there for now and continue here. 24.75, right? That'll be right about there. Okay, so based on this signal, which has around a 72% probability, we need for the moving average and the volatility components here, right? These the histogram to be beyond that 15% zone for an official fire of a signal. And not only that is that it would be highly ideal that we get our momentum pivoted towards the upside. Okay, so in this case, you can see that the first targets to kind of observe here would be about 69.59, followed by about 70.50, followed by about 75.47, and the last target here would be about 80.61. Okay, now these are statistical targets that we're getting here based on, just please remember that it's definitely not we're talking about stats here, okay? This is not a magic crystal ball or anything. These are just probabilities based on criteria and factoring in signals, okay? So let's go ahead and come back to this thesis here and see if we have any of those targets kind of shining in. 69, 70, and 75 thus far. 69, right? And now we have here the 71 of the 1.618. Yeah. So we absolutely have correlation to the targets of both geometrics, psychological price objectives, and now statistical targets as well, right? So looking pretty damn good. What we can do now for the 75.47, which is the upper bound of your first standard deviation, we could add it into this as well. 75.47 is, guess what? The 2-spot 272 Fibonacci ratio. If you don't know me very well, I love the 272 targets, the 618. I like all of them, really, right? But the 618 and 272 stick out to me. Not to say that not any other ones are not useful, right? Because you definitely have very important ones in there, like the 786, 236, 382. All of those are very important, okay? All right, so yeah, so we were just going to add the range in total here, right? So we have, let me just bring this over here. Yeah, so we have that range going from 69 cents to about 75.47. So 69, right about here, to about 75.47. So let's just leave it at 75 for argument's sake. And naturally speaking, the 72-cent target, which is the upper bound of your pennant take profit, would be the center of this area here. So I would say yes, our bounds are 69 to 75 with a focus of 71 to 72 cents at the 1-spot 618 Fibonacci ratio, and consistent to the upper bound of your to the upper bound of the first standard deviation from your critical means, right? So 9.21 and 7.77% to the upside. This is absolutely nice. Okay, team, so that is how you do it. Now, what about this one here? What about 8061? Is it there? It's in the cards, right? But please remember that we have a very little average true range here, so this can take some time for it to resolve. So that top side target, 8061, well, do we have anything to, yeah, well, check it out. The 3-spot 272 at 81 cents. Very nice. So 8061, just like this, and we'll leave the 81 right up there. So that leaves us a pretty nice confluent target to the 3-spot 272 Fibonacci ratio. Okay, team? And yes, we still have higher bounds to observe here, right? But those are not in question just yet. Let's just go ahead and cross the boat when we get there, and then everything will be cool. All right, team? So now you know the targets. Now you know the potentials here. So please be very careful when practicing any type of trades here. Use proper risk management, right? Make sure to ask questions as you trade the financial markets here, whether it be traditional equities, whether it be crypto, bonds, currencies, whatever it is, right? Try to find a mentor. Try to find whomever can help you do this. Now, if you are interested, right, I am offering here. This is going to be, let's just call it an 8 to 12 week mentorship program, a Strategies Mentorship Program for stock trading, right? So that's going to be something that I'm going to be offering here pretty soon. So definitely get your hands on this because the seats are already starting to get taken. So ArcMastersCourse at gmail.com. And I will go ahead and send you the syllabus, the disclaimer, and everything pertinent to the 8 to 12 week Strategies Mentorship. Okay, so please remember to do that as soon as possible before those seats get taken, okay? I appreciate everybody for watching here. Please make sure to engage with the channel, like the video, share the video, and everything will be cool. All right, team? So let's go ahead and cut this out and have a good rest of your Sunday. Please take whatever I do show and iterate within these videos as just a form of entertainment, as I cannot suggest for you to buy, sell, or hold any assets whatsoever. Never, ever, never, never, never. I need you to do your own due diligence and everything will be cool. But with that said, team, I wish you well a very, very good rest of your weekend and a good Easter weekend. And I'll catch you at the Bell Mañana. Adios.